Assalamualaikum and hello everyone. Hope you guys are having a great day today. So let's start our case study presentation. Okay, so this is the group members: Nur Afiqah binti Rohaizad, Nurul Atikah binti Yaziz, Abdul Muiz bin Abdul Wahab, and also Nuraina Innati binti Gazali. Alright, so let's begin with the question number 1. So basically, question number 1 is about on topic 8, which is profit planning. So the question is about Cement Industrial Gas Corporation and also all of the information that given. They also gave the balance sheet of the October 31. So this is all the information that we will use later to answer the question. Alright, so after reviewing the question, it asks us for a schedule of expected cash collection for November and also December. So basically, we just need to find the total cash collection for both months. So let's look at the table where we already provide. So the first step is we need to find the cash sales, which is from the information given. 75% of the sales is equivalent to the cash sales of the month. So for November is 75% multiplied by 340,000, and 75% multiplied by 360,000 is for December. And for the credit sales, the information said that it can get from 25% of the previous month sales. So as for November, we just take it from the receivable account from the October, which is from the balance sheet, which is 83,200, and also for December credit sales, just multiply 25% with 340,000, which is the sales of November. So if we add up the total of cash sales and also the credit sales, we can get the total cash collection, which is for November is 338,200 and for December is 355,000. Okay, so let's move to the next question, which is merchandise purchase budget for November and also December. So basically, in this question, we need to find the required purchase for the November and also December. So the first step is we need to find the budgeted cost of goods sold, which is 71% of the sale. So for November, it is 71% times 340,000. We can get 241,400. And for December is 71% times by 360,000. We can get 255,600. And also for January, 71% times 350,000 and we get 248,500. So the next step is we need to add with the desired ending inventory, which is 75% of the cost of goods sold of the following month. So for November, we multiply 75% with the December budgeted cost of goods sold, which is 75% multiply 255,600 and we can get 191,700. And same goes to the 75%. We multiply with January COGS, which is 248,500 and we get 186,375 ringgit. So we total up for November and December, we can get the total niche, which is for November is 430,100 and for December is 141,975. And after that, we calculate the beginning inventory, which is 181,050. We can get it from the merchandise inventory of 31 October, which is from the balance sheet. And the beginning inventory for December, we can get it from the desired ending inventory, which is we calculated in November, which is 191,700. So we minus the total need with the beginning inventory, we can get the required purchase, which is 252.50 ringgit for November and 250 and 275 for December. And then after that, we need to form the cash disbursement, which is for November, December, and also for January. Okay, so for November disbursement, we simply take it from the account payable of October, which is from the balance sheet, 196,200. And for December, just take it from the November purchase, which is 252,050, and for January, we just take it from the December purchase that we calculated before, which is 250,275. Alright, so we can get the total disbursement for. Okay, so for the next question, we required to find the cash budget for November and also December. So basically, just take all of the information from the previous slide that we have calculated. So the first is beginning cash balance. For the beginning cash balance, just take it from the balance sheet, which is from the cash of 31 October 22200, and just add it with the cash collection, which is we have calculated it from the previous slide, which is 338,200, and we can get the total cash available, which is 260 and 400. And then for the cash disbursement also, we just take it from the previous slide that we have calculated for November, which is 196,200, and also we minus with the expenses that is stated from the question, which is 21,400. So if we add up our cash disbursement and also the expenses, we can get the total cash disbursement, which is 217 and 600, which is for the November. And to find the cash balance ending, just take the total cash available minus with the total cash disbursement. So for November, the total cash balance ending, which is 142,800. And then to find the December beginning cash balance, just simply take it from the cash balance ending of the November, and then add with the cash collection that we also have calculated from the previous slide, and then we can get the total cash available, which is 497,800. And then minus with the cash disbursement also from the previous slide is 252,050, and then minus the expenses from the question. It says that expenses is on each month, so 21400, and then the total cash disbursement, we just minus it with the total cash available for the December, and then we can get 224,350 for the cash balance ending for December.
My name is Nur Afiqah binti Abu Yaziz, and now I will proceed with the budgeted income statement for November and December. Okay, so for this part, I will separate between both months. Okay, the first one is income statement for the month ended November 30. Okay, the sale for November is $340,000 minus with the cost of goods sold. The calculation of cost of goods sold, the beginning inventory we take from the question, $181,050 plus with the required purchase for November, $252,050. So we will get the good available for sale, which is $433,100, and then we minus with the ending inventory that have been calculated from previous question, $191,700. Okay, so we will get the total of cost of goods sold, which is $241,400. To get the gross margin, sales minus with the cost of goods sold, so we will get $98,600, and then we minus with the selling and administrative expenses, monthly depreciation that has been stated at the question, 21,200, and other monthly expenses, which is 21,400, and then we total up both depreciation and other expenses, we get $42,600. Okay, so gross margin minus with the selling and administrative expenses, so we will get $56,000 for net income for November. Okay, next, for income statement for the month ended December 31st, we take the sale from the December, which is $360,000 minus with cost of goods sold. Okay, so the calculation of cost of goods sold, beginning inventory, we take the ending inventory from previous month. The beginning inventory is $191,700. We plus with the required purchase for the December, which is $250,275. Then we get good available for sale, which is $441,975, and then we minus with the ending inventory, $186,375, and then we get the total cost of goods sold is $255,600. And then we get the gross margin by minus sales with cost of goods sold. So we get $104,400. And then we minus with the selling and administrative expenses. For monthly depreciation and monthly expenses, that total $42,600. So we get the net income for December is $61,800. And the last question for question 1 is budgeted balance sheet for December. Okay, so first we need to find the total asset. Cash we get from the question, which is $224,350. Account receivable we get from 25% from sales for December, so we get $90,000. Inventory is the ending inventory, which is $186,375. Property, plant and equipment, the calculation is $1,006,000 minus with the depreciation for 2 months, which is for November and December, so we will get $963,600. Okay, so total up all the assets, we get $1,464,325. Okay, so for the next part is liabilities and equity. Okay, account payable we get from the total disbursement for January, which is $250,275. The common stock is from creation, $640,000. And return earning, the total return earning from recursion, which is $456,250, plus with the net income for November, which is $56,000, plus with net income for December, which is $61,800. So we will get $574,050. So total up all the liabilities and equity, we will get $1,464,325.
Okay, the next question is about flexible budget, standard cost and variance analysis. All of the information given is about Tanjung Piai Company manufactures electrical goods. So we need to compute all the direct materials, direct labor and variable manufacturing overhead variance for the October. Alright, for question A, we need to compute direct labor rate variance by actual rate minus standard rate times actual hour. So first we need to multiply the normal time of October and then plus the overtime of October. Then we can times the actual hour by 7. So we get the answer is 280 unfavorable. Next, for the question B, we need to minus actual hour and standard hour, then multiply by standard rate. So we calculate that by 3,400 times 7 and minus 800 times 4 times 7, and we get the answer is 1,400 unfavorable. So the total of labor variance we get 1,680 unfavorable. Alright, for the next question, we need to calculate the direct material price variance. Okay, we use the formula actual quantity we multiply by actual price minus standard price. Okay, we'll calculate for the iron first. So, 5,000 we multiply by 2 minus 2, we get 0. So, for the copper, 2,200 we multiply by 3 ringgit 10 cent minus 3 ringgit. So we got 220 unfavorable. So for the total direct material price variance, we get 220 unfavorable. Okay, so for the next question, direct material quantity variance we get by standard price, we multiply by actual quantity minus standard quantity. So same from the previous question, we need to calculate for the iron first. So we multiply 805 and we minus to the 3,900 and we multiply with 2. So we get 200 favorable. And for the copper, we need to multiply 3 and 800 and we minus 2,600 and we get the answer and we times by 3 and we get 600 and unfavorable. So the total direct material quantity variance, we got 200 favorable minus 600 unfavorable, we get 400 and unfavorable.
To find the overhead expenditure variance change, firstly, we need to find the actual hour and then we multiply by the amount of actual rate minus standard rate. So, the actual hour is 12,000, the actual rate is 3,400 and we multiply by 3, which is the standard rate. So we will get 1,800 and it is unfavorable. For the overhead efficiency variance change, the formula is actual hour minus standard hour, and we'll multiply it by standard rate, which is 3,400 times by 3 minus 8,800 times by 4 times by $3. So we will get 600 unfavorable. So the total variable overhead variance is 1,800 plus 600, which is equal to 2,400, which is unfavorable. For question G and question H, to find budget variance expenditure for fixed overhead, the formula is actual fixed overhead minus by budget fixed overhead. So we will get 8,800 minus 4,000 times by 2. We will get 800 unfavorable for the budget variance expenditure for fixed overhead. For volume variance on fixed overhead, the formula is budgeted fixed overhead minus fixed overhead applied, which is 4,000 minus 800 times by 4, and then we multiply by $2 and we'll get 1,600, which is unfavorable. So the total fixed overhead variance is 800 plus 1,600, which will get 2,400, and it is unfavorable.